Hello, good morning, good afternoon, good evening, wherever you are. It is a Monday, it's a good Monday. Uh, Yesterday I made kind of a, a brief analysis for this weekly outlook. Now I think with today's Monday's price action, we have quite right, we have direction of where we want to head. So this is previous week. So previous weekly high, we expanded beyond this previous weekly high. Just a second. Yes. So this is on a monthly time frame. This is the previous month. This is the month of July. Now this is second last week of the month. We're expected to expand a little bit higher than we will, but first to form the week month. Going on to that was monthly. On a monthly time frame, which levels are you interested in knowing? You are interested in knowing the previous monthly high, okay? Which is right here, because we are in this range. Once we have the previous monthly high, we go to the weekly time frame. The weekly time frame, these are the things you want to take note of when you're doing your analysis on every day. So on a weekly time frame, you want to take note of the 3 weeks high, previous weekly high, the 2 weeks high, and this high. But for now, we watch price action. If it reaches here, then we go down to this level. We also want to watch the consequent encroachment of this high. Yeah, level head here. Watch the consequent encroachment, the previous weekly high. So this one here. Tick levels are weekly and monthly levels. So what do I mean? So each time you are viewing price action, now before this, for today, before this candle for this week opened, imagine it was not there. Imagine that this candle is not here. We want to watch this week. We mark from the low to the high, the consequent encroachment, and we observe. Since we are bullish, our first target is the consequent encroachment, then this high. Now we go on to this, you mark it there. Now we got the daily. On a daily time frame, let's go back to the weekly time frame, and I make this visible at all time frames. Oh, I'm gonna make this a different color. Make this red. So when you go to the daily time frame, this is how I'm doing my analysis. Okay, I know that in a weekly time frame, this red fib indicates the week of the previous week. I want to see when price action opens up, because our target was this consequent encroachment and then this high. So price action opened up here. So these are the things you want to take note of. You want to take note of the fib. I draw my fib. Let me just redraw this so you can see what I'm meaning. So this is it. Just weekly what? High. And this is on the consequent encroachment. So I'm going to say this is what? This is Thursday's high. Daily key levels, I'm gonna make them the thickness of 2. And I'm gonna change their color to, I'm gonna change these colors to, yeah. So this is it, Thursday's high. But Thursday's high, it is also in line with the consequent encroachment of the week. See, of which week? Of the weekly week. This is important when I go to the lower time frames. I have to take note of these levels. Now, So this candle opened. Imagine it wasn't here. You want to observe. Let me just go back to replay mode. Right now I'm in a trade, paper trade, going pretty well. But for now, let's go to replay trading and we assume this candle has not been formed, okay? Let's assume this was Friday's trading price action. When the wick opens, we want to see. Now I'm going to remove this because we know our levels. This is the low, the high, let's go encroachment. I've made it line up with this. I want to observe when we open on Monday, okay? When we open on Monday, things we need to ask in order for us to get directional bias are the following. From this high, low to this high, we want to mark this week. We want to see how does price open. Does it show intentions to displace through this consequent encroachment of this week? If it shows, that means price action is gonna aim for this high. But if price action opens, does it show intentions to go through the with displacement through this? So these are like guiding principles before we determine our directional bias. Let me just change this color to black. Okay. That we have this on all time frames. Okay. Gonna extend them to the left. Extend it to the left. To the left. Going to put the prices also. We have the levels and the prices. And them to the left also. Right. Okay. We have these levels to the right. I'm also doing the same thing to this one. Also, extend to the right with the levels, prices, and the levels. So we want these levels on our charts at the point with our prices to the right. Okay. We can label them, but we know them. These are daily levels with the consequent approaching. So we'll play days price action. So going on to the Monday, you want to see how does Monday open? Does Monday open and show displacement above this? Then we are bullish. So let's end the replay mode. Now, this is what happened. Okay. Remember, we have the weekly high of 17th. This one we said we mark it here. This will be a good place to buy from and price action returns. So we want to order our charts. This is also a very good price point to buy from. If this, then that. If the other, then that. Then this one also. These are our levels, okay? Now, once we have these levels on our charts, we are now going to go to the 1 hour time frame. So, in the 1 hour time frame, we also want to take note of this daily fair value gap low. How do you know? So these ones, I'm gonna make them with a thickness of, I'm gonna make them thick, but got it. Lens with a thickness of how much? 1%. So now, this is also the, I'll copy this, bring it here. Yes, daily FVG0. This one was the daily FVG high. FVG high. So how do we use these levels? When price action returns these points, what I mean, when price action returns this point, does it support price to go down? And does it fail? When it fails this and the excess support, it will take us lower. That is according to our analysis. Now, when we go down, we finish to mark our levels, we go down to the 1 hour time frame. 1 hour. Our trade is moving well. We'll increase our take profits to about the size of this. Now, 1 hour time frame, what do we want to see? Okay. In the 1 hour time frame, the things we're interested in, we want to draw out these levels with our hands, okay? And we want to make them thick. One is the new week opening gap. It should be thick with a distinct color, because these levels are going to determine how the trade. So, but them, these are so important for us. This is a new week. Low opening up high. For the week. And the text to be blue. So we're going to copy this. This is the week opening gap low. The things you want to do. New week opening gap high and new week opening gap low. I think we need to take off like 3 contracts at this high. Of 3 contracts here and hold the rest of it. So as you have the new week opening gap high, we first remove the first presented fair value gaps because they are making the charts look a little bit disorganized. So once I have this new week opening gaps, you can have both of them, or you can have one of them. This week, so there is also for this week. Now once I have this, remember this level, let's put it a bit up here. So we have another new week opening gap here. Oh, there's this one. There's this one here. Once you have that, you can now remove the indicator so you don't want your charts to be crowded. So the indicator is called opening up by FUD. Once we have that, now we have our levels. Remember what I told you? That we have these levels here. The cost cutting encroachment is 0.5%. So what happened? Let me also remove this indicator. It's called the bar charts. Higher time frame. City higher time frame candles. Yes. Mhm. So when we are analyzing price action, we interested in seeing how does the price react. How do we open up on Sunday morning? And it's trading. This is what we want to see. Remember, we have the wick, the lower half, and the upper half. Now the lower half is here. Price action opens right here. It requests to low. Remember, this is a Trinity seal. This is a very strong price point. Price can always find support on this level. Let me label this. Middle is in the middle. So this is a strong price point, and this gives us directional bias. Remember, we have a Trinity seal. Okay? If we are bullish before market opened right here, assuming this is Monday's price action, we don't know. This is where price action closed actually. When I just show you on replay mode, this is where last week's trading happened. And what you observe is that there was a fair value gap here on the 1 hour time frame. If we this fair value gap held us up, and if it keeps us up, we are bullish. But if we go below it and acts as support, then we'll start to see lower prices. This fair value gap is so important to us. Yeah, we'll leave it here. Now this level is so important that this is the week consequent crossment of the data week. We want to see the market opens. Does it displace below this week? If we fail, then it does it displace higher? This one we was the price. Let's go back to normal price action. So what we notice that price opens, it even failed to reach the consequent encroachment of DC 0.5%, and then it immediately rejected. And what is interesting is that we opened with the gap. We have a new week opening gap high and low with this Trinity seal. So there are so many PDRs holding us to go higher. When Sunday opens up, we want to see it open up. It went and reached the consequent encroachment of this week of the daily time frame. The consequent encroachment we displaced immediately pierced through it with momentum. So we want price action to up higher, and then this show us intentions to go higher, and then come and act as support on this new opening gap for us to go a bit higher again. So this is what we actually saw happened. Now we don't need this anymore. We can remove this, but we need the consequent encroachment to the daily week, okay? Just in the headlines, okay? So I'm gonna use, most times I look for the key level which is close to that level. That is what I label. This consequent to daily week. I'm gonna make this text, this template gonna be dotted with the minimum thickness. So I don't need this high. I now take this level. Now you see our levels are so clean, and we don't want any distortions. So this is the previous weekly high. Now, the time we went through the consequent encroachment of this week, our target was going to be its previous weekly high, and we look for taking off any sell side, and we expand higher, which is what happened today. But these are the things you need to know. When Monday opens up, gaps higher, it gapped higher. We want this to act as support. You see gap higher, price came on support. Then we can rounded retest, get support, and go higher. So now this is where it was tricky from. Going on to the hour time frame, we have all our levels, right? We have all our levels. Going on to the lower time frame, so this is a level I didn't have on chart. I should have put this level as it printed out, but this is should have been G5. Now, going on to the lower time frame, like let's on a 15 seconds chart, today's trading. So today was literally very tricky day. So what happened is that before 9:30, the market opened. I don't know if we had news at 8:30. I was not really sure. We saw market drop. Maybe before. This is what happened. The market opened on Sunday. It gapped higher right here. And it came and found support. And here found support to continue higher. Now we wait for price to return to this level. Does it support price to go higher? So we see that price at around 9 comes. See, we fail to displace below the high was quite encouragement and the low as important levels. So we pierce through the high. We failed to pierce through the low. Price we failed. If you want to be a buyer, you want to be a buyer below this level. Immediately we displace through this level, then we know we are going up. So we displace through this fair value gap. Institutional order flow into drill was happening here. So as we were leaving work, driving so fast, so I could reach here and be at the charts, but I failed to make it. So this should have been your first entry. For those who are on the charts, you know that your target is the previous weekly high. Stop loss just below level, and you target the previous weekly high. This could have been an easy trade. Easy Monday. Being a Monday, price action was one direction. It went up. I reached the charts at around. I reached the charts. I reached the charts at around here. And I reached around 9:31. I saw price out has this high. Kept seeing price climb up. It wasn't giving me any liquidity sweep on 1 minute. I put in the past value gap, and there was a previous weekly high here, so I felt like I shouldn't sell. Next time when we put in this and we displace through this with a fair value gap, I was waiting to sell if this formed a opportunity sale, but this was a bearish candle. But if this was a bullish candle, I would have gotten into this long right here. This one right here. But then this didn't fulfill my, if this first candle was bullish, I would have gotten into this long right here. But this candle, so next time we are bullish, we're expecting bullish price action to continue, and just wait for displacement above the previous weekly level. And also, I was also waiting for price to return to this level to act as support. Price just exploded with this candle. Now, what happened now is that I waited here. I think I saw price here chop along. Then I think I attempted a short, which wasn't a confirmation here before this closed below. But then, let me show my executions. I did some more trades today. My executions. So I attempted to sell here because I was anticipating it to come early. Test this. I failed. So short here. I short here. This one took me off. And I shorted more here. And took me out. Close my second trade. Second out. I was like, what's happening? And I short more here. Had trade, then I thought I was on the wrong side of the market. So I bought here. Bought more here. Took this here. Now here. So that okay. It was time to put in a retracement, which has a 10:30. But 10:30 is when the trend changes. At 10:30, I short this market here. Short, and I took profits here. It literally failed to displace lower. These were my trades like this. The first long was here. First long was here, I think. I was longing so that we could take out this high, but it was failing. So I just market exited. And the first short, because I thought we had overexpanded, attempted to short here. This was the wrong, without any confirmation. I don't know why I was doing this. I don't do this. This was wrong. Then again, I attempted to short more here. Attempted to short more here. And I realized that I was wrong side of the market. Now, I made some losses back on a short here, because when we are bearish and we are expecting shorts, we want to see at least some manipulation. So when we see the down close candle confirms the shorts, once shorts are confirmed, you wait for at least a manipulation. This up close candle is a manipulation. Break below, then you can sell. So I short, I took partials, I was selling more, but I kept taking partials. Now, when I took partials, it wasn't going down. So this, I bought more here, because now it was stopping to go down. No, I took this, but I didn't have anything in mind. I think I was just reading order flow. So based on order flow, I was aiming to take out this high before I resume sales. That's why I kept buying to take out that high before we resume shorts. When I bought, I took profits where? I bought more, took profits up here. And it's going to go, took profits here. But then here, I didn't really have direction of the market. What happened here is got lost. Now when I got lost, I was in a long, took me out here. Then okay, I realized that we had taken out this buy side that I was waiting for. This buy side was taken. This buy side was taken. Let me just remove this. After this buy side was taken, we displaced lower on the 5 minutes to show that we were literally dropping. Then I came and I sold here. My stop loss was above here. Sold up to here. I think I took partials, and I took partials here. Here I sold more, here I sold more. Now here I sold, I moved my stop loss to break even here, as this trade was showing a reversal. And remember, 12:30 is always a reversal. Now you want you to note the times when the things turn around. This turnaround was at 10:30. Then from 10:30 we go to 12. 12 is when this one started moving. You see this? Then 12:30, the turnaround time. So I bought more here. I think this is the trade I'm currently in. I bought here, and probably this trade, and it's 1:30, another turnaround time of price. Stop loss was below here. My take profit was to target this from the high and then higher high. So I think I need to take off. I've been taking partials. And stack off more so that you can really use taking partials here, took partials here, took partials here. It's like price action doesn't want to give me final trades now to be here. We are already at break even. So I bought more. Actually, I bought from this candle here. My stop loss was below this candle here. Let's see this 1.5 level gap. Just below this 1.5 level gap, because it will be the last line of defense. Basically, I think that's it for today. They were literally bullish, and if you're bullish, wait for a sweep of a low and you buy. But I think here it got so lost in the middle. Also, price action wasn't that nice today. So I think that's it. Since PM buy side has been taken, we have sell side here. And today being a Monday, we expect from a week. No? 30 was the first fair value gap. So if this low is taken out, then we expect to drop lower to the 1 hour fair value gap. Be watching this low in this accumulation manipulation in the next 30 minutes at around 150 macro. This fails to go to take profit and turns around. Okay. This should be line of defense. Is what I expect to happen. If we fail to go up, I think we have SMT with ES. We see this bearish candle. This is what I expect it to come. Then settle here, we bounce here, and then close the day. That's what I'm thinking now. That's it for Monday. It's been a boring Monday, but we made sense out of it. We made some demo dollars. How many? Over $1,000. Our losses were here. Took 2 losses here. 3 loss. 5, 6, 7. And got 7 losses, and the rest were winners. 1, 2, 3, 4, 5, 6. The winners were more. So this is it. Trading transaction on a Monday. So I'm going to kill my trade. 130, and we have this best lower. I expect price to start going lower. So I'm going to get 2, so 5. So I'm gonna sell with 5, so I need 3 contracts. Time for turnaround now. Stop loss just about this high. Profit is at this now. This is the last trade for the day. Why? Because we've taken a PM buy side. We failed to take out the other highs, and we are expecting it to form the daily, and we have over expanded. And probably we have SMT with ES. Haven't yet checked. This is the last trade for the day. Just briefly check ES. I'm sure I have SMT with ES, don't we? No SMT. SMT, I have SMT. Yes, took these highs, and Q has failed. So yeah, that's it. Hope you learned something from this one. See, closing the charts right here. So PM sell side here. The accumulation manipulation. Now distribution is coming in. If we don't displace below this low with the fair value gap, then we will come and sweep this high. Remember that low? put in a short-term low, short-term low. Want this place below this with the fair value gap. If we don't form a fair value gap, watch the consequent encroachment of this week. And mostly we will sweep it and then come on. Yeah. That's it.